So we can see that price was making higher highs and higher lows and it was going down. Then all the retail traders or all the supply and demand traders, right, they will look this as a supply zone. Yes or no? Like, because they will look this one as a supply zone. And now, as I taught you in my previous video, and the link will be in the bio, in my previous video I taught you a strategy in which you have to do the opposite of the supply and demand traders. So if you were and see that time period, the time period is at like 2 o'clock, correct? 2 o'clock there was a big move towards the upside like this. Okay, there was a big move towards the upside, and now all the retail traders, when they will see this move, first they will be looking for sells, okay, during the London session. And then what will happen after that? Price just rip through and they take their stop loss right over here, and now they can see that it is a breakout, right? So now they will look this one as a breakout, and they will try to take buys on this over here at a retest. Okay, but what we have to do is we have to just take the trades right over here where the stop losses will be hunted. So for example, if over here, if you can find any round psychological level, see, like from that round psychological level 1.07600, from there market just tapped into it, and then it kept on falling and went down and took the previous day's low right over here. We can see that market was going up from here, higher highs, higher lows, higher high, higher low, and then higher high, and now this is a lower low, right? Because this candle goes below this higher low, right? Like this. So over here was my entry, and I was targeting this relative equal highs, because lots of retail traders, they might be thinking that this is a resistance. Okay, but what happens after that? I just took a buy right over here, and then my target was just little bit small target, 1:2 or something, and it just went above over there and took that highs. And see, after that, this type of move, and market came down one more time to take this low. See, if you can see, it was like a from a small pinpoint. Here's the proper example. Okay, I will show you some examples right over here, like 5 or 6 examples. So first one is this one. Okay, if you guys can see over here, this was creating a support, right? It was creating a support, and all the retail traders, okay, they will be looking this line as a support. And now what they will do is they will just mark a resistance, or they will mark the support, and then they will mark this zone right over here like this. And now what will happen is they will take a buy over here, they will see a bullish engulfing right over here, and look at the time below. Okay, you have to look for this liquidity runs in a particular time period in a day. Okay, it can be from 10 to 11, or it can be the afternoon session also in nasdaq, and it's different for forex and all. It's like London kill zone and New York kill zone. So right over here, people will take buy right over here. Okay, and then what they will do is they will put the stop loss where? Just below this structure, right? As the book says, and as the retail approach says, that you have to take a buy over here, and you have to put your stop losses just below this. Okay, and now what will happen is then market will go and take the low right over here. At this moment, the retail trader will think that it is a breakout. Okay, but the thing is, we have to do opposite of it. We have to just buy a little bit below of this demand zone right over here, and you can put a particular stop losses. So for example, you can do it like this, 30 points, or you can do 20 points. The stop losses are different in every pair. In forex it's different, and in this nasdaq and indices it's different. People will see that price fell down from here. Okay, and now it was what is this candle? This line is a resistance, and this candle will be a supply zone, right? Because they will see that market reached till over this supply zone, and then it fell down. And then in the afternoon session, what happens? Price goes up like this. And now when people will see that this candle broke out this structure, they will think that this is what? This is a breakout. okay, and they will take a buy right over here. But what I told you, we have to do the opposite of them. So we will just take a sell right over here, and you can put the 30 points or 40 points stop loss right over here, and you can target this low. First price took these two highs right over here, and then people can see that this is, what is this? This is something like what you call the moon. It's some term in retail trading that it's like a more morning star or something like that. That type of candle with a long wick. So now what the other people will do, they will mark this candle or this candle as what? The demand zone, okay? And now price fell down right over here, and now they are looking over here that it is a breakout, okay? And now look closely, it's a breakout, and then they will look for confirmation candle, and they can see this candle. This is a smaller version of this candle, okay? They will see this candle and they will take a sell right over here. And what happens after that? Price kept on going up and up. So this is the thing that it's quite confusing also, but the thing is it's easy for us because we are just doing the opposite of the 90%, okay? To be in a 10%, you have to do the opposite of the 90%. So that's why if people are taking buy from the demand zone, okay, we have to just wait for their stop losses to be taken, because the big guys, they want to do, because the algorithm is designed in such a way to take the stop losses and to maintain the liquidity in the market, okay?